Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently down 7.49% to 4686. Ethereum down 7.62% to 2893. From my 30 plus years in financial markets, I explained the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Rule 138, all investors become traders every time they buy or sell. A lot of investors focus on the fundamentals. What is this particular crypto doing? What's its tokenomics? How is it growing? What are the network effects? All of those kind of things. Technicals, how is the price actually moving? Rule 74, technicals beat fundamentals. This is very hard for a lot of investors to stomach. Why did, for example, Ethereum, if you were in Ethereum, why did it just come down 7.62%? Or Sol or Matic down 9.12%? Or BNB or XRP? What is actually happening here? Have the fundamentals changed? The answer is no, the fundamentals have not changed. The fact is that crypto is a really tiny market in comparison with the stock market and the bond market. Crypto around $2 trillion, stock market around $120 trillion, bond market around $124 trillion. We can see crypto is just starting its adoption. We're really early inside the crypto market, and crypto represents the ownership layer of Web 3.0, the decentralized internet. What is actually happening to your beloved alts? Is Bitcoin, Rule 45, no alt can escape Bitcoin's gravity? Crypto technical analysts are very aware of the news. We look at the charts because they give us the insight. When we look across the US markets, we can see fear spiked up. The Nasdaq 100 came down. Oil is consolidating. Bond prices increased. Bond yields decreased. We can see this incredible surge in the gold price. This is geopolitical risk at its finest. This is Russia. Russia is bringing down the markets, and we can see the DXY is decreasing back to a level of support. A lot of people say, no, it's the Fed, and the interest rate rises. But when we actually search Reuters for the Fed, we can see gold jumps, stock slide on Ukraine tensions. Ukraine, it's all about Ukraine. And when we search Russia, we can see US says Russia is preparing pretext to invade Ukraine. There's overwhelming negative news sentiment at the moment that Russia will go to war with Ukraine. We're going to know in a couple of days' time what actually happens. Russia, Belarus to end drills as planned by officials. So they're saying on February 20th, they will withdraw. In a few days, we'll see exactly what happens. Professional traders and investors have learnt to live with fear. And Rupert said something really interesting. To live without fear, we must first learn to live with fear. And it's absolutely correct. How we live with fear as professional investors and traders is to understand that certainty means the opportunity has already passed. Professionals expect the best, prepare for the worst, and capitalize on what comes. On days like today, you can see the foundation of success is positively dealing with losses, and that is not easy to do. It takes knowledge to be able to deal with paper losses. One thing that can be of great assistance is Rule 112, markets profit in uncertainty. We always talk about the light switch concept, where people just new to crypto, retail, investors and traders, light switch out. They go all in or all out. They tend to buy on the green and they tend to sell on the red. Professionals do exactly the opposite. There's a lot more to it. Professionals know how to draw support and resistance lines. They know how to interpret the signals that the markets send, and not just their beloved alts. They have a wider field of view. If you were just looking at Bitcoin's price like this, what does it actually mean? Where is it going to stop? Is it going to go further down? Where is it going to go further down? What place does it actually stop? What are we looking at here? Are we concerned? Is this all over? These are the questions that professionals ask every single day. Having a pure, fundamental perspective on things can be really, really confusing when it comes to the crypto market, as well as using technical analysis borrowed from the stock market. I've seen a lot of really interesting things about inverse head and shoulder patterns, all sorts of things play out inside the crypto market. The crypto market is unlike any other market in the world. You need very rapid signals to do your analysis, and a lot of stock market patterns don't actually play out in the crypto space. They just don't complete. And if they do, they actually unwind really, really quickly. One thing that you might like to notice is we're starting to see news reports of $10,000 Bitcoin, like what we saw down here near the lows in mid-July. I was saying in mid-July that we were looking at around a 30,000 bottom, and that's pretty much where it stopped. I called that around the 19th of May when we had this long tail rejection now, which is a capitulation candle. What we're basically seeing is that the market is reacting to global events at the moment. When we look at a chart like this through the eyes of a new investor or trader into the crypto space, it could be really, really terrifying. But it gets far less terrifying when you actually know what is going on inside the market. What actually happened here? There was an easing of tension between Russia and Ukraine. People thought, okay, this thing is actually over. But then we got some conflicting news, and the 44,402 level held very, very strong as a resistance level. And then we saw increased tension again. Now what is happening? We're bypassing key levels on our way to this 4547 mark. This is crypto. Crypto moves around unlike any market in the world. It's amazing when comparing the stock market, we can see what we would call just non-event movements like 5 or 10%. And people basically melt down in the stock market. When it comes to crypto, doing a 50% reduction, yeah, it's every other week. But so is the inverse of this. When crypto goes up, it can go up hundreds of percent, and that's tied to the reduction. If you buy a particular crypto for $10, it goes down to $5. You've just seen a 50% decrease. But when it comes back up to $10, what is the increase in percentage? Please let me know in the comments section. It's a very important percentage to understand. If you don't understand that, you will not understand the 10-5-10 volatility fund, and you cannot make volatility your best friend, which is what all professionals in the crypto market do. That's why professionals always make in advance probabilistic choices. They know what they're going to do if price goes down, goes up, or goes sideways. Unfortunately, a lot of retail investors and traders only know one of these positions, and it's generally it has to go up. The truth is, professionals can make money no matter what the market conditions. A bear market, a bull market, consolidation makes absolutely no difference to us. Understanding support and resistance is really, really important. In fact, it is vital. If you only understand the foundations or the fundamentals of your crypto, you will be completely perplexed by its price behavior. What we can do is we can just make it fun, and hey, things should be fun. Let's have a look at these lines as being fences and price being a sheep, Percy, the magnetic price sheep. Now, why is he magnetic? Why is price magnetic? Price is magnetic because it tends to oscillate between support lines, which aligns below price, and resistance lines, which aligns above price. When we were doing yesterday's episode, Percy was about here. We saw price come down to this particular point. Now what happened? It broke through a major or key fence and it tried to come back, retest, and then it weakened through this fence. It tried to retest, it made its way down through another key level. And where is it stopping right now? At a key magnetic point, at a key fence. By understanding support and resistance levels, you can actually understand where price will have a hard time getting through because it's resistance. There's a fence line there. And when the fence is broken, it will be magnetized towards the next very powerful fence. Not all fences are created equal. Some are made out of paper, some are made out of bricks, and some are electrified. We're basically getting up to some electrified fences. This is really, really important to understand. If you didn't have this knowledge of how to draw support and resistance, you could very well think it's going to 10,000. It's all over. Crypto winter, here we come. This is just natural price action. I can hear you saying, natural price action? You got to be kidding, Ken. This is a catastrophe. It's all over. It's nearly 10% down. It must be just the end of the world. This is crypto. What we actually see when you have such a big move up, this was a really, really big move. We have to have consolidation or digestion. If it goes up the wall, it will come down the stairs. This is actually really healthy. And we've seen an actual trend change in the market. What does that trend change look like? If we take the top price around the 9th of November, just about here, and we draw it down through the body of price action, what do we actually see? This is a resistance line that I call a very tight resistance line. What is price doing? We draw these kind of lines because we want to understand, is price changing? Is the trend changing? The very fact that we got above here is really, really good. And what do we see here? There's a level of support, diagonal support coming in through here as well. So what does this mean? Should we go all in and more? No, never. Price is negatively biased by nature. It does these things all the time, but it typically inverses. For example, people buying this long tail rejection, they did very, very well from here back to this point. For example, from that bottom around to the top was a 23% increase, but from this bottom up to this top was about 40% increase. This is really, really important to understand. When price comes down a certain degree, and we can see from this top to around this bottom, price came down over 52%. But what happens when price actually comes back up? When we see price come back up and recover to this previous level, it doesn't go back up 50%. It actually goes up over 100%. This is one of the key things that professional investors and traders understand really, really well. You dollar cost average in when you're getting red. The redder the better. And you actually scale out when things are turning green. You're absolutely the opposite of a retail investor and trader. What actually occurs when people are new to the market, when they're thinking from a retail perspective, not an institutional smart money mindset, they will swap out, they'll light switch out on days like today. And that is absolutely fair and reasonable for people to do that. After all, they're following retail influencers and retail traders who have got their YouTube stations. They don't really know what they're doing from an institutional perspective. So they do all sorts of things to scare their communities. And in so doing, cost them a lot of money. When you actually look at these negatives, if you actually buy really well, you will always make a profit. And that's why I say where you buy determines your profitability, not where you sell. You could buy at the best possible price and an absolute worst possible retracement in price and you will make money. But if people don't buy correctly, they can't profit. The reason I started this channel and our community was to help transfer my 30 plus years in financial markets. I was really sick of seeing influencers who had a retail mindset and just leading their people off the cliff. The concept is how you think determines your profitability. And in trading and investing, the foundation of success is dealing positively with losses. A fun way to look at crypto technical analysis is just to make Percy the magnetic price sheet. Let's have a look at Percy. Oh, look at that. Percy, he's got his bling on. Percy, you've been really naughty. You've gone down. I'm sorry, Ken. That was Percy. Oh, Percy spoke. Okay, what are we actually looking at here? When we see this magnetism of price, we can see prices come down to this is a very strong fence through 4547. We can see that Percy has two friends. He's always trying to figure out if he goes to FUD or if he goes to FOMO. If he gets negative and hangs out with his best negative friend, fear, uncertainty, and doubt, or he wants to party and go and meet fear of missing out, FOMO. What we can see is that basically FUD is closer to the price than FOMO. And one thing that you might like to keep in mind, this is light switching behavior. This is a lot of liquidations of retail trading and investing positions. When this happens, the institutions like to go the other way. They like to actually continuously pull the rug on the retail crowd, and it's unfortunate, but if you understand this, you can do something about it. Let me know in the comments section on YouTube where you think Percy the magnetized price sheet is going. Is Percy going to go down and meet FUD at 38,935? Or is Percy trying to make his way back up to FOMO at 44,402? I'd love to hear your thoughts. We can gauge potential momentum inside the market by looking at the options expiring at the end of the month. We can see the put-call ratio is 0.73. This basically favors higher prices, and we can see a lot of confluence at the 50,000 mark. Max pain is currently 42,000, where the majority of option holders, both long and short, call and put, would get liquidated and cause the maximum amount of pain. There's a very powerful relationship between futures open interest, this green line here, and Bitcoin's price. You can see how closely they follow one another. When I look at the Bitcoin futures open interest chart, I see this, an increasing line of support, an increasing secondary line of support. Please let me know in the comment section what you think this means. It's a very important thing to understand. More so, what do you think it's actually going to mean over time? If we draw one more line in here, this particular line, what do you think that means? All of these questions are really, really important to be able to answer. Looking at the market, we can see Bitcoin has come down. And what we understand is Bitcoin's gravity will impact all the alts. So therefore, this blue line that we're looking at is a really critical line. This is the concept that no alt can escape Bitcoin's gravity. When we look at Binance Coin, we can see the gravity of Bitcoin just moving Binance Coin. The same with XRP, the same with ADA, Cardano, the same with Solana, the same with AVAX, the same with Luna. We need to understand this. So when you actually look at Bitcoin Percy and see what fences Bitcoin Percy is up against, it's a really good thing to actually understand. I just want to reach out and say thank you to everyone in the community. You're just such beautiful people. And let me know Barry, he came up with this particular GIF. Oh, let me know Barry is so good. And this is Percy the magnetic price sheet. We're just giving him a hand over that electrified fence. And here we can see FUD or FOMO, we're not quite sure which is which, giving Percy the thumbs up. Go up, Percy, go up. I'm so very happy that members of our community, such as the Meditative Mind, understand these are not bad things. These are actually opportunities when things sell off. The Meditative Mind said, oof, was it something I said? I used to panic on days like this, but now I think like an institution and only buy on red. Well done, my friend. It's actually really interesting when you think about it. You think about when you go shopping, do you want to go and get a sale price, or do you want to pay 10, 20, 30% more than what you should be going for? I think most people like a bit of a discount. But when it comes to the crypto market, people want certainty more than they want a bargain. And that actually creates buying when prices go up. It's the only place it happens. Everything that I try to do each day, 7 days a week, 365 days a year, is to help you to look at these price action movements and say, wow, something's on sale. This is not bad. And it may even get a better price as time goes along. That's how you want to be thinking. You want to be thinking about how far could this actually come down? What's going to stop it? You need to draw your support and resistance lines. They're really, really important. They'll give you an indication as to where price can stop. XRP has been behaving really, really powerfully. Go XRP. And this is really important in the SEC versus Ripple case. XRP is the kind of bellwether on how that SEC case is going. And it's not looking too good for the SEC at the moment. Thank goodness. Because if you understand what is actually happening with XRP and the SEC, you will be undeniably saying XRP win, win, win. And that's what we hope to. Cardano, I'll come back to this and Solana later. These were the winners in our Twitter poll of what would you like me to dive more deeply into. Let's have a look at AVAX. AVAX has got a very nice upward support line. We know the price is negatively biased, so we put our buy orders at support levels below. Let's have a look at Luna. Luna has sold off with Bitcoin. Every single alt gets hit by Bitcoin's gravity. And a lot of people don't actually know this. I've seen many influencers talking through specific coins, coming to different conclusions on the same thing. If they knew that Bitcoin's gravity is the ruler of the crypto market, they wouldn't do such obviously wrong things. You can see what we see here, especially when we get big sell-offs. 99% of the crypto market will move with Bitcoin's gravity. For the 1% that don't, they will snap back at some stage. Let's drill into ADA. What we can see here is recently ADA was butting up against its overhead resistance level, playing through here. It's got another resistance level above. Because we had a lot of negative air, price didn't make it to this resistance level. Therefore, that signifies there are a lot of sellers in the market pushing ADA's price down. But always remember, when people actually sell, when they're going short, what actually happens is they just run out of ammunition at some point, sooner or later, and then it becomes like a beach ball that's submerged underwater. It basically just explodes up. And what we can actually see here with ADA around this particular support line at 1033, it's touched that many, many times. This is a really strong fence. This is like an electrified fence. So whilst there's many sellers, I nearly said sailors, thinking of Michael Saylor, many sellers inside ADA, what we need to do is just think about what we're actually trying to accomplish. For example, if we bought now at 1033. Well, we could buy a little bit lower because it's actually lower. And we wouldn't buy at market. We'd just put it down just a tad, because you never ever want to pay full price. You don't do it when you shop in the real world, so don't do it when you actually shop in crypto land. Let's have a think about what this percentage increase is. It's about 19.7%. And to many in the crypto space, well, that's just totally unreasonable. 19%? Oh, let's have a look. What about if you put balances up to $245,000 into a high interest savings account? You would get 1%. Wow, that's phenomenal. I can't believe the generosity of the banks. What about this? 1.1%, 0.95% for first 4 months for balances up to $100,000. Wow. From that perspective, 19.7% doesn't seem too bad. And crypto can do this really quickly. It can whipsaw up and down. For example, if we look at this particular price action here, from up to there, that was 27.66%. And how long did that take? Under 1 day. This is crypto. Crypto is just incredible if you understand how to deal with the volatility. What about this? From down here to up here, over 20%. What about here? See, price is always moving in a wave, up 15%. This is definitely better than bank interest. And that's all you realistically need to think about. I'm not even getting the tops or the bottoms here, but it's already over 12%. Something to bear in mind. There's always opportunities in crypto. It doesn't matter. Bull market, bear market, consolidation. It is irrelevant if you are a professional trader or investor. And professional trading is a really good thing, but you need the knowledge. So what we actually see here is that buying around this particular price is about 19.7. If we go one level lower to 95.2 or 952, it actually becomes 28.83%. And if we go a level lower to basically 888, we're looking at 38.26%. And we can get these long tails coming down all the time in the crypto market. This is how we make volatility our best friend. Something really interesting, we're looking on the 2-hour time frame. If we actually zoom out a little bit and we go to the 4-hour time frame, the dynamics change a little bit. So if we wanted to sell up to this particular spike, we would see, just say for example, around that level. And you can just put this order, this sell order into the market and just let it wait there. What we can see is some very, very good returns, a 56% return from around the current price. And notice that we've dipped down a little bit. This is why we always do negative price action. We want to buy at support levels down, never paying full price. We don't like to pay full price. We're definitely not stingy people, but we do not want to pay full price inside the market. Sooner or later, this particular level will be taken out by upward price momentum. You can see that that's a 56% increase from that lower level. From a lower level below that, 952, it's 68.17%. And from the 889 level, it's 79.8%. If we go out to a daily time frame, we can see that this kind of recovery is not really much. It's just a blip, if anything. But if you understand how to trade, and I believe this is a trader's market at the moment, it's not really an investor's market at the moment, you can trade in and out of this particular price action and do really, really well. Let's turn our attention to Solana. From the top perspective, how far has Solana come down? It's come down about 68.84%. And what happens when it recovers its price? It will go up around 220%. But we don't need to wait for recovery. We can see that Solana and ADA have similar patterns, but ADA is already below this particular level of support, whereas Solana is showing a little bit more strength. It's a little bit of a stronger project at the moment. Let's have a look at Solana from the same perspective that we looked at for ADA. If we just buy around the current price and it goes just back to this particular level, that's a 25.33% increase. And it's not so bad, really, if you think about it. Getting 1% from the bank or 25% from Solana, yeah, it could be nice. If we go down a little bit further to this 83.93 level and we buy there, just coming back up to this key resistance here is an increase of 39%. What about going down one more level to this 75.52? The retracement back to this level of resistance at 116.87 is a 54.95% increase. When we look at the lower level of 68.40, just retracing back to 116.87 is a 70.85% return. I always say just compare the return to bank interest and see if you're doing better. And if you can get whatever return in a faster period of time, that's of course really good as well. But you need patience in the crypto market. You can see why professional traders and investors always want to buy lower. Look at these percentages. They can make a very, very big difference. I've seen so many influencers go in at market with really large sums of money. It makes the hairs on the back of my neck stand up. If you're wanting to put a certain amount of money inside any crypto, please split your levels, the amount of money across all the levels, and just do it like that. I know it's kind of weird feeling to not have certainty, but that is the difference between a professional and retail. Please do not be retail. Retail gets slaughtered in the crypto market. I want you to be prosperous. Many people are losing in this sea of red, and that's exactly the time when professionals enter. We don't enter on green, we enter on red. Please let me know in the comments section, where do you feel the crypto market is going? Where do you think Bitcoin may actually head to? Always please remember, crypto technical analysts are in control professionals. We understand volatility and we're in control emotionally. We do not light switch. We don't buy on green and sell on red. We buy on red and sell on green. We graduate into trades and investments, and they're both the same thing, and we graduate out of them in layers and levels. Please let me know where you think Bitcoin's price will end up by next episode. I look forward to your comments. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Please feel free to subscribe if you haven't already. We'd love to have you as part of our globally extended family. Thank you to our moderators for keeping our community safe from scammers, and the CTKS ambassadors for mentoring masterclass students. Please say hi and let me know if you have any questions or there are specific cryptos that you would like me to analyze. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass. Please seek out an ambassador to get 80% off. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.